Hey everyone, me Kevin here. Many of you know that I'm pretty heavily invested in real estate. I currently control about $12 million worth of real estate, about half of that in stocks. So I'm much heavier in real estate than I am in stocks, but both matter to me. And many of you also know that I went heavy on stocks during the last 4 months. However, now things are shifting. Congress can't get their act together, and relying on them to help people on unemployment seems like a joke at this point. My stimulus videos sound more like comedy skits, and although I think they're funny, I'm concerned that a lack of a serious unemployment boost or a lack of serious stimulus for individuals, eviction protections, and continuance of forbearance options is going to be devastating for both real estate and stocks, at least in the short term. In this video, I'm going to explain my updated concerns as of today, July 22nd, for real estate and stocks. I'll talk about Tesla earnings. I'll give you some of my thoughts on Dave & Buster's, Chipotle, LMND, Nikola, and again, also Tesla. And then I will finish out with my 3 rules for right now. In my opinion, though, all of this is very good information. Which, by the way, if you also want really good information on how to make YouTube videos just like this by yourself from home in an easy and simple manner and learn all of my hacks, check out the newly announced YouTube course that is on pre-sale in the link down below. All right, let's get started. Number 1. First, we have heard nothing so far from Congress about eviction protections. Eviction protections are currently expected to expire this Friday. This means that tenants who have been behind on rent will likely see the eviction hammer drop, and we'll see a wave of evictions over the next few months, which could create an entire pool of qualified tenants with evictions on their records. Now, remember, landlords screen people's eviction records when they go to screen tenants. And this does mean that evicted tenants might have to be forced to move to different areas that are willing to rent to them with evictions on their records. This usually means lower income areas and apartment complexes might be open to accepting these tenants, and these tenants might oversaturate these areas, which might potentially be poorer areas. Now, that might make us think that, okay, well, maybe we should invest in poorer areas because if more people are moving there, prices go up, right? But you have to be careful. Population growth in lower income areas is sometimes associated with more poverty, more crime, and less public resources. So ironically, even though you might feel like you're investing in an area where the population is growing, you could be investing in an area that is actually decaying. Usually population growth is a good sign of success in real estate, but not always. It might also mean that we are going to see a decline in areas where people are leaving, the more expensive areas. Now, right now, none of this is true. And it's possible that none of this becomes true. But we have to pay attention starting now to the potential inflection points that are coming to the market. And it's the inflection points that are what I track. I keep an eye all the time on which direction is the market going now, and is it inflecting down or up, and what am I going to do to adjust my plans now? I had somebody in the comments yesterday complain that it seems like I change my mind too often. And I think most of you who loyally follow me know that I have a very rigid and consistent investing plan. Buy high quality stocks and buy real estate below market value. Are there fluctuations and movements within that? Of course. But that's called not being blind to changes that happen in the marketplace. You have to adjust when big changes happen. Right now, housing is blowing up. Prices continue to skyrocket as people are in bidding wars across the country because rates are low and there is not enough real estate to buy right now. There are not enough people saying, pandemic, I'll sell my house during a pandemic. Well, no, duh, there's not enough inventory right now. It's not a surprise, but in my opinion, this is beginning to artificially bubble up a little bit real estate prices. Yes, there is a lot more stimulus money flowing into the market and people are looking to place this money. But in my opinion, we need to have more of sort of an insulative blanket right now and be a little bit more protected while still being in the game. It's kind of like being in the snowy scene in Age of Empires. You kind of want to build a fire. Okay, you don't really build a fire in Age of Empires, but I think y'all know what I mean with the analogy. Let's just forget that and let's just move on. An eviction crisis would be likely to take place over the next 6 to 12 months, unless there's severe action, like very good and clear action from our government. And this will very likely lead to much more available inventory. When that happens over the next 6 to 12 months, and as more inventory hits the market, it would not surprise me to see a short-term rebalancing. Now, I made a full detailed breakdown of my thoughts specifically for the real estate market about a week to 2 weeks ago. I'll link that up here and down below about the 3 risk factors that we could be seeing in real estate. This is specifically about the eviction crisis, and then I want to talk how that's going to affect stocks and real estate and what I'm doing. Real estate price growth will probably slow, as in my opinion, if more real estate becomes available, more people are going to take money out of the stock market and potentially go buy new real estate that's hitting the market. This, in my opinion, could lead to a leveling in prices on both sides. That is, we're starting to see real estate prices go up so high so fast that even with all of the extra stimulus, we still can't justify some of the prices in some areas that we're seeing. An eviction crisis could literally be the start of a pullback, not a crash. Think of it more of a correction, a rebalancing. With this in mind, I am not a bear. I am still a bull. However, I'm putting that blanket on. I currently have 2 properties that are 100% paid for, and I'm going to use those properties. It's about somewhere around $1.3 million in real estate. I'm going to use those properties as a piggy bank in case the market changes in the next 3 months. I have a mental problem. Ordinarily, I would just hoard cash, but every time I have cash in my bank account, I spend it on stocks or real estate. So by keeping money locked up in these paid off properties, or by, even, dare I say it, pay off your mortgage a little bit, or don't cash out refinance. By basically not cashing out by doing a refinance, I'm leaving more money locked up for at least 30 to 40 days. That gives me a blanket. So that way, if we do see some kind of correction over the next 6 to 12 months, not expecting a crash unless we get all 3 of those factors that I talked about in the other real estate video. But for now, regarding the eviction crisis, in the short term, I'm not expecting a crash, but if we see that rebalancing, then I can go, all right, let's unlock the piggy bank, so to speak, refinance, and then take the money. But by then, in 3 to 6 months, I'll have a much clearer picture of what's going on with the pandemic and what's going on with the election. So that's kind of where I'm piggy banking cash right now. This is basically my way of trying not to trick myself to spend money. If you don't have real estate, another way you can do this that I like doing is buying index funds. So I put money into the metkevin.com/basket. You can put that in your browser, metkevin.com/basket. That's a collection of 4 index funds. And you'll see I've kind of broken it down into my top 4 picks and the allocations for those. It's like 35% in QQQ and some of the other things. That's also where I'm putting extra cash. So that way I have cash in 2 places. One in the index funds, which I don't mind selling out of if a good deal comes up. It's kind of like the short-term store of money for me. It's very diversified. And in real estate that has less debt. Basically, purposely not refinancing as a safety net. Again, if we see a rebalancing, then it'll be time to move in. Now, here's what I'm doing in the short term in terms of stocks. Let's use Tesla as an example. Tesla, for those of you in my investing group, know that I bought a bit of Tesla this morning. I bought 10 shares prior to earnings. Earnings are going to come in within about an hour of posting this video. My guess is the Tesla stock will either totally miss gross margin expectations because they're spending too much money on PPE, and it'll lead the stock to fall 5 to 15%. If that happens, and if Tesla falls over 10%, I am going to buy 50 shares. If Tesla goes up, I might buy 10 shares and forget about it. I might not even buy anything if Tesla goes up. It's probably, in my opinion, it's going to come down to their vehicle margin. We'll see what they end up saying. However, if there's an overreaction and Tesla falls 15+%, 10+%, I'll move some of this money that I'm kind of keeping aside and like index funds or whatever, I'll move some of that into Tesla. These, in my opinion, are the kind of short-term overreactions we might expect to see in the market. And if we see those with quality companies like Lemonade and Chipotle and Tesla, and even though these companies have insane valuations, Lemonade, Chipotle, and Tesla, they have a proven model and they will be very profitable in the long term. In my opinion, these are companies that I'm okay buying in the short term for long-term growth. And I don't mind buying the dip on those now. In the meantime, it's really important to watch for those changes in the real estate market to see how the eviction crisis is going to affect everything. Again, if that rebalancing occurs, we'll see softness in both stocks and real estate, as people might move money from stocks to real estate. With all that said, here are my 3 rules. Number 1, protect the base. I want enough cash available in real estate without debt or less debt, not refinancing, or enough money in index funds so that I'm prepared for whatever happens throughout the eviction crisis, and I'm okay. I have an emergency fund. But I'm not so concerned that I'm going to gold or cash. Number 2, pay attention to your speculative holdings. Folks, Nikola, speculative. We know, very speculative. If it falls under $30, I'd be more of a real buyer. I nibbled on it a tiny little bit at like $39. Big deal. That's not an endorsement, by the way. Dave & Buster's, it's speculative. Look, we've got Jefferies and BlackRock. They probably have like a 30% stake in Dave & Buster's. Do I actually expect Dave & Buster's to burn Jefferies and BlackRock? No, but it could happen. Dave & Buster's could go bankrupt. Simon Property Group, do I love malls? No, I hate malls. It's a total, like, Nikola, Dave & Buster's, and Simon Property Group are just spec plays. Less than 10% of your money in those. So pay attention to your speculative holdings and don't let like short-term euphoria let you get too high on the speculative. Rule number 3, focus on quality, quality, quality. I can't stress that enough. I see a ton of people trying to buy garbage real estate right now just because it's like there's FOMO happening or SOMO, sadness of having missed out on real estate gains. Focus on quality companies, focus on quality real estate and quality areas. That's going to protect you in the long term no matter what happens. Quality. And if you can get that at a discount, I'm all in my opinion. So protect your base. Don't go nuts on margin and have a lack of cash or a lack of access to cash. Keep your money diversified, but feel free to jump on good deals that come up, either oversold stocks or real estate deals that are below market value, like what I teach you about in the real estate investing course. And number 2, be very careful with speculating. We're in a totally unknown territory right now. Number 3, focus on quality. There we go. Hopefully that clarifies all of my intentions. Hopefully this helps you out. I really appreciate you watching this. If you like this kind of detailed content, remember that I post stock and real estate videos at least once a day. If you don't get a notification for it, come looking for it. Thank you so much for watching. We will see you again later.